Imagine coming home after a long day of work in Singapore, opening your physical mailbox and finding a formal brown envelope with the letters IRAS printed in bold across the front. Your heart instantly drops and a cold sweat breaks out. For most people, getting a letter from the Inland Revenue Authority of Singapore is their absolute worst nightmare. But in 2026, getting audited is no longer just a random stroke of bad luck. The government has quietly rolled out highly advanced artificial intelligence and data analytics tools designed to automatically scan and flag any tiny discrepancy in your accounts. If you are a business owner, a freelancer, or even an individual investor, there are 5 major red flags that will instantly trigger a manual tax investigation and place your entire financial life under a microscope. Today, we are going to look at these 5 silent tax traps so you can protect your hard-earned wealth and stay completely off the radar of the taxman. Let us start with the background of how tax enforcement has changed in Singapore. In the current financial year, IRAS has dramatically ramped up its audit campaigns, recovering more than 200 million Singapore dollars in unpaid taxes and heavy penalties. The days of manual spot checks are completely gone. Instead, the tax office relies on automated risk-based profiling. The system continuously cross-references your private bank transfers, your company's transactions, and even third-party data from other government agencies. If your filings do not perfectly align with what their algorithms expect, your profile is automatically flagged, and an auditor is assigned to open a full investigation. The first major red flag is one that traps thousands of local business owners and self-employed professionals every single year. It is the S-plated private car trap. In Singapore, owning a car is an astronomical expense due to the skyrocketing cost of a certificate of entitlement. To bypass these high costs, many directors and sole proprietors attempt to run their private vehicles as business expenses, claiming deductions on petrol, road tax, insurance, repairs, parking, and even electronic road pricing fees. But here is the hard, unbending law. IRAS has a complete, absolute ban on claiming business deductions for private passenger cars with standard S-plated registration numbers. It does not matter if you use the car 100% of the time to visit corporate clients or deliver products. By law, these expenses are deemed strictly personal and are entirely non-deductible. The automated IRAS systems specifically scan corporate ledgers for keywords like motor vehicle expenses or transport reimbursements. If they spot these claims on an S-plated car, it triggers an immediate audit, and they will go back through your accounts for the past 5 years, demanding full payment of back taxes plus penalties. The second red flag is a silent trap for the growing number of stock and cryptocurrency traders in Singapore. One of the greatest financial benefits of living in Singapore is that the country has a flat 0% tax rate on capital gains and dividend income. If you buy a stock or a coin, watch it double, and sell it, you get to keep every single cent tax-free. But there is a massive catch. If you trade too frequently, IRAS can legally reclassify your investment profits as active business income, which is subject to standard tax rates of up to 22% for individuals or 17% for companies. The tax office uses a set of guidelines known as the badges of trade to determine if you are a passive investor or an active trader. The system tracks the frequency of your transactions, how long you hold the assets, and whether you are using leverage or borrowed money to finance your trades. If you are buying and selling stocks or crypto multiple times a week, or holding assets for only a few days before taking profit, the automated risk engine will flag your account. You will find yourself facing a manual audit where you must prove you are not running an undeclared trading business. The third red flag is a massive focus area for IRAS in 2026, and it involves hidden rental income. The Singapore rental market is incredibly lucrative, with rents for private condominiums and public housing flats hitting record highs. Many homeowners choose to rent out spare rooms or sublet their entire properties. But under the law, every single dollar of rental income is fully taxable. Some landlords try to stay off the grid by accepting cash payments or not declaring their rental agreements on their tax forms. But IRAS has built a flawless, automated cross-check system using the e-stamping database. Whenever a tenant signs a lease in Singapore, they must pay a compulsory stamp duty fee, which is logged electronically with the government. The IRAS database automatically matches these e-stamping records against the property owner's personal income tax returns. If a tenant has logged a rental agreement on your property, but your tax form shows zero rental income, a red flag is instantly triggered. The system will automatically issue a demand for explanation, and you will be forced to pay the tax undercharged, plus a heavy penalty. The fourth red flag is aimed directly at business owners and employers, and it involves discrepancies between your payroll data and Central Provident Fund contributions. If you employ 5 or more workers in Singapore, you are legally required to submit their salary details electronically via the Auto Inclusion Scheme, or AIS, before the 1st of March deadline. At the same time, you must make mandatory employer contributions to their Central Provident Fund accounts every single month. IRAS uses sophisticated data matching to compare the exact salary figures you declare for tax purposes against the wages used to calculate your monthly pension contributions. If there is even a single dollar of mismatch between your internal payroll registers, your tax filings, and your Central Provident Fund submissions, the system flags the inconsistency immediately. This also applies to benefits in kind. If you provide your employees with taxable benefits, such as car allowances or corporate awards exceeding 200 Singapore dollars, and fail to declare them correctly on Form IR8A, the system will spot the omission. Maintaining manual payroll spreadsheets is one of the highest risk factors for triggering an immediate business audit. The fifth and final red flag involves a very common mistake with the new Enterprise Innovation Scheme, or EIS, introduced in the recent budget. To encourage businesses to adopt new technologies, the government offers a massive 400% tax deduction on qualifying innovation expenses, capped at 50,000 Singapore dollars. On top of that, companies can receive a minimum cash grant of 1,500 Singapore dollars if they employed at least one local worker in the previous year. Because these incentives are so generous, IRAS is heavily policing this space. The red flag is attempting to claim the 400% deduction for basic general IT expenses, like a standard company website, a generic spreadsheet software, or basic digital marketing services. To qualify for the EIS tax relief, the software must be explicitly AI-enabled, utilizing advanced technologies like machine learning, natural language processing, or predictive analytics. If you try to claim these massive tax deductions without proper, highly detailed technical documentation or invoices from pre-approved vendors, IRAS's automated fraud detection will reject your claim instantly, flag your company profile, and initiate a comprehensive tax investigation. The key to surviving in Singapore's highly efficient economy is not to hide, but to build a system of flawless compliance. The tax office is not looking to punish honest mistakes, but their automated systems are designed to flag anything that looks like non-compliance. By keeping your personal car expenses completely separate from your business accounts, holding your long-term investments for months rather than days, ensuring your rental income matches the e-stamping records, and automating your payroll to align perfectly with your Central Provident Fund contributions, you can make your financial profile completely invisible to the audit engines. The wealthiest people in Singapore do not take unnecessary risks with the taxman. They study the rules, maintain immaculate digital records, and ensure their compliance is completely bulletproof. If this video helped you understand how to navigate Singapore's tax system safely, do me a favor and smash that like button to help other local investors find this content. Subscribe to the channel, turn on notifications so you never miss our next financial breakdown, And let me know in the comments if you have ever received one of those dreaded brown envelopes. Thank you for watching, and I will see you in the next one.